Are you looking to purchase an investment property in the UK? If you are, this video is for you. What I'm about to share with you will help you understand the exact tax you pay for investing in a property within the UK. Hey guys, my name is Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. Before I get to the video, I'd like to thank each and everyone who subscribed to the channel. The channel is growing immensely. We literally skyrocketing. It's absolutely amazing and good feelings to see the channel is growing immensely. We've done a research, we've realized it's going down actually. 45% of the people that are watching our channels have not hit that subscribe button. If you are one of those, I kindly ask you to smash that subscribe button right now to join the family. And here's the promise I'll make to you. I'll ensure I provide you with valuable, actionable content to allow you to take your finances into your own hands instead of relying on your employers. And also, I will be inviting amazing entrepreneurs, influencers, business people to shine a light on how you can start and scale your investment as well. So let's get to it. You see, in order for you to invest in the UK, you are going to be asked to pay tax. So any property you buy in the UK for investment purposes, you'll require to pay tax. And each countries or regions within the UK has different set of taxes to pay as well. And they tend to call it differently as well. So in this video, I'm going to share with you the name of these taxes each country calls it, how to calculate the tax on a step-by-step basis, and what would be your total tax to buy in a specific property. Most importantly, how to mitigate the tax you would pay, and in some instances to eradicate it altogether so that you do not need to pay that tax legally, not illegally. In order to buy a property legally in the UK, you would have to pay a stamp duty tax. Each of these regions call the tax you pay for buying properties or land differently. In Wales, the stamp duty is called Land and Building Transaction Tax. In short, it's LBTT. So we've got various steps of how much tax you'd need to pay for buying an investment property in Wales. So any property below £145,000, the tax you would have paid to the government is £8,700. So that money is what your solicitor collects on the behalf of the government and then pay that money to the government. So £8,700 goes shoop to the government, okay? So the next part, so any property between the price range of £145,000 to £250,000 pays 8% tax. So is the additional amount. Is the additional amount you would have paid. The difference is between £250,000 and £145,000 is what you would have paid the 8% for, which would have been £105,000. So the tax you would have paid for the £105,000 is £8,400. So in essence, you don't pay the 8% on the £250,000. You pay the 8% on the additional, the difference, which is the £105,000. That's why you've got that £8,400. The mistake lots of investors do when they're analyzing their deals, they calculate the tax based on the whole sum, which then kind of increases the tax burden, and then they're thinking, whoa, this property is so expensive, I cannot afford to buy it, not knowing that cost is a step-up cost. So you only get charged for the additional difference to the tax that you pay to the government. So in this example, if you're buying £250,000 property in Wales, the tax you would have paid is £17,100 because 8,700 plus 8,400 is 17,100 pounds. So we move on to the next part. The next part now is the tax you would pay between the difference of the £325,000 and the £250,000. And that would have been £74,500. So you pay 11%. You pay 11% on the £74,500, which would have been £8,250. So that's an additional amount you would have paid. So in total, if you bought a £325,000 house in Scotland, your total tax would have been £25,350. £25,350 you would have gone to the Scottish government. Let's now move on to the next step of the cost. Suppose now we're buying a property that worth £750,000. So the additional tax we would have paid is the difference between £325,000 and £750,000. Then, so the tax we would have paid would be the difference between £750,000 and £325,000, which would have been £425,000. So we would have paid 16% of that as a tax to the Welsh government. So that would have been £68,000. That £68,000 again would have gone to the government. So if you buy £750,000 property in Wales, that would have been the amount of money you would have paid to the government. So again, if you add this cost together, the total you would have paid to the government would have been £93,350. That goes to the Scottish government for say thank you for investing in the UK, or to be precise, in Scotland. Moving on to the next part. Suppose then the property is over £750,000. Again, any additional amount to that would have been 18% as well. So the differences, you've got the idea now, the differences between the 750 to whatever amount you're buying that property would have been the tax you would have paid to the Scottish government. So if we total this up, suppose we stop at £150,000, our total tax liabilities to the government of Scotland would have been, as I said earlier, £93,350. Zhush, that goes to the government, no question asked. So these are the taxes you would pay for investing in Wales. So look at the figures. You can say, okay, 145,000, 8,700, anything additional, 8,400. When you start moving up the scale, it starts becoming a little bit expensive. You can see here, from 250 to 325, you're talking about 8,250 additional, right? Additional, almost equal addition. So then that then rack it up to that price. So if you move on from 325 to 750, talking about 16%, that would have cost you an addition of £68,000. So in total, for £750,000 property, you would have paid £93,350 to the government for acquiring a £750,000 investment property. Listen to this. The reason I'm sharing this, I've seen so many investors lose deals or buy properties that becomes a rope on their neck only because they forgot or they did not know how to do the calculations to ensure they pay the correct tax, or even to find out whether that property is worth investing in the first place. They get a completion statement from their solicitors only to realize they need to go and find another £15,000 to pay in taxes. So I really hope this has shined a light to you and gets you to understand exactly how to calculate your taxes in readiness for buying and investment properties. The key things to note here, the calculations we've done here is based on investment properties, properties that you're buying to rent out, not to live in. It's a complete different calculations to buying properties to live in. Sometimes the government have some leeways, they have some exemptions, they have some certain things around it. But these calculations here are purely based on buying investment properties in the UK. I hope this video has been helpful. If this video has been helpful, smash the like button below, subscribe to my channel for more amazing tutorials. I look forward to sharing the next one. Thank you.